This is a screenshot of the S&P 500. The SSO is an EFT that exactly mirrors the S&P 500. Here you can see I've plotted the SSO below a screenshot of the S&P 500, and you can see how closely it mirrors the S&P 500. The SDS is another EFT that moves in exactly the opposite direction of the S&P 500. If we move the SSO EFT to the top of the screen and the SDS on the bottom, we now have two ETFs that exactly move in the opposite direction of each other. The significance of this is that many retirement programs prohibit short trading. So, for instance, if you would want to short the S&P 500, you would go long on the SDS. We've established that SSO and SDS are two electronically traded funds that move in opposite directions of each other. Now, how can we take advantage of that in trading? Here you can see the SSO, which represents the S&P 500, has had a nice up move here. The question is this move going to continue, or is it going to start down now? What I like to do is to plot the SDS in a hidden subplot and plot my indicators on the SSO as well as the SDS and compare them. Here's how this is done. This is my proprietary LS oscillator, and it's plotted on the SSO here, and the dashed line of the same oscillator is plotted on the SDS data, which is hidden from the screen. If we move ahead a day, we can see that the two indicators have crossed here. When the dashed line of the LS oscillator crosses above the trigger line here and above the solid LS oscillator, that indicates the equity is going to move down. We can see if we just looked at the equity up here, the SSO electronically traded fund, we would not clearly see that there was any move imminent. A paint bar indicator, another proprietary indicator I like to use, paints the uptrend blue and the downtrend red. You can see here it just turned from blue to red, which confirms change in direction of the SSO. If we move forward in time a week, you can see how this picked up right at the beginning of an early significant down move. Also note over here there were a couple of retracements in the uptrend, but these retracements remained blue, and you can see the two indicators did not cross during these retracements. Going back to the area where the SSO showed a change in direction right here, it's going to go down now, and this is where you would go long on the SDS in order to short the S&P. Now moving to a screenshot of the SDS, we can see where the long signal comes in right here when the bars turn blue, and the LS oscillators cross each other right here. Now we're using the SSO as the hidden data. 1 week later, you can see how we got in at the very beginning of a nice uptrend here, and how the indicators crossed right here and are moving in opposite directions. So this is how you would short the Standard & Poor 500 by going long on the SDS.